Welcome to the 2026 ABLE Tax Time Tips. We'll begin shortly. We're providing another minute or so to give attendees time to log in.
You got dreams in your pocket, they glow. A little spark, a little fire, let them show. Every step you take, you're building more. Through every open, unlocked door. Click apply, make your play. Turn the page, start today. Keep the faith, build with care. ABLE's your future, always there. The road ahead, it twists and bends, but every journey finds its ends. Hold the reins, you've got the power. This is your moment, your finest hour. Click apply, make your play. Turn the page, start today. Keep the faith, build with care. ABLE's your future, always there. What you see is what you'll make. Every leap is yours to take. Dreams aren't whispers, they're a shout. ABLE helps you work it out. Click apply, make your play.
Hello, I'd like to start with a few housekeeping slides. Listening to the webinar. The audio for today's meeting can be accessed using computer audio or by calling in by phone. If you select computer audio, please make sure your speakers are turned on or your headphones are plugged in. If you do not have sound capabilities on your computer or prefer to listen by phone, dial 1-929-205-6099, meeting code 819-3305-6421. Questions and technical assistance. The chat has been disabled for attendees. If you have questions, please use the Q&A box. We encourage you to simply make note of your questions and listen to the full webinar before entering your question in the Q&A box. We often answer questions within the presentation. If your questions are not answered or you're listening by phone, please email info@ablenrc.org or visit our website, ablenrc.org, and contact us if our resources do not provide the answer you are seeking. If you have technical difficulties during the webinar, use the Q&A box to send a message to the NDI host, or you may email info@ablenrc.org with the subject line, Webinar Help. Today, we are joined by Captions First, who is providing real-time captioning, and Interpreter Now with American Sign Language interpretation. The captions can be found by clicking on the closed captions icon in your Zoom controls at the bottom of the screen. To access the ASL interpretation, please click on Interpretation in the menu bar at the bottom of your screen, and then select American Sign Language. Please note there are two interpreters who will switch on and off throughout the presentation. Note, if you do not see the captions after clicking the button, nor see the ASL interpreters on the screen, please alert the host via the Q&A box. As a reminder, this webinar is being recorded and you will have access to the PowerPoint slides, this recording and supplemental materials. In some of the slides, there is a direct link to go to a site that will give you more information. You will also have access to click on these links in the PDF, and we will be posting the PDF of this presentation in the chat window as well. ABLE National Resource Center provides all the ABLE information you need in one place. ABLE NRC shares reliable, objective information about ABLE plans, including plan comparisons, best practices, and strategies to increase savings for now and into the future. Our mission is to educate, promote, and support the positive impact ABLE can make on the lives of millions of Americans with disabilities and their families. So with that, I'd like to introduce the presenters. We have Amelia, Dalton, Senior Tax Analyst, National Partnerships with the Internal Revenue Service, and Laurie Schaller with ABLE NRC, Manager of Financial Empowerment with National Disability Institute.
Thank you very much, Cheyenne. So let's get started with today's agenda. So we'll be talking about how to use your ABLE and tax updates for 2026. There have been many changes for 2026. We'll cover why filing taxes is so important for people who have a disability in particular. We'll cover access resources and discover free ways to file your 2025 taxes, and combine strategies and best practices to maximize the ABLE account savings in your 2026 calendar year and beyond. So ABLE matters. ABLE Achieving a Better Life Experience accounts are designed exclusively for people who have a disability, and they provide the opportunity for that person to save and invest money without paying taxes on ABLE investment growth. Account owners who receive needs-based benefits can save more than the savings limit, usually $2,000, and still qualify for means-tested benefits that they may need now or they may need in the future. ABLE savings can be spent on a variety of things that help the person stay healthy, independent, and have a good life. ABLE is a tool to secure and invest your financial future. So, age of onset of disability has expanded this calendar year from before age 26 to before the age of 46. So this means that anyone who has a disability, a significant disability, that began before age 46 is now ABLE eligible. The annual contribution limit has increased from $20,000 up to $35,650 for eligible employed ABLE account owners. The 3 provisions set to expire last calendar year have been made permanent. This includes that Able to Work Act, the Savers Credit, and the ability to roll over a 529 qualified tuition plan into an ABLE account. Some state ABLE plans are making enhancements, including offering state tax credits or deductions. Okay, and next slide. So there are 51 ABLE plans from which to choose, including DC and Guam each have their own ABLE plan as well. If a person is ABLE eligible, they can open one ABLE account. Many plans accept out-of-state residents. So, for example, you may wish to use the ABLE NRC comparison tools and interactive state map to compare ABLE plans. And you could research maybe starting with your state of residence's ABLE plan first to see if there are special incentives, deductions, or state tax credits that you may be eligible for. Next slide. So, who should file taxes? A person who works, who has a disability, should file income taxes regardless of the amount of their earnings. Earned income may be documented on a W-2 or a 1099 form. And for 2026, each time a person works, for example, this calendar year, and they've earned 1,890, they've earned points toward another quarter of coverage towards SSDI and or a retirement benefit in the future. And if they have dependents and survivors, they also may become eligible for these benefits based upon that individual's work history. Okay, next slide. So tax filing is really crucial. Filing a tax return is the only way to claim a tax credit or to receive a tax refund for taxes already paid, like through employer withholdings. A person can receive future economic impact stimulus payments faster if they have a record with the IRS of having filed income taxes. A person can use their income tax refund to pay back taxes and or SSA overpayments that they might owe. And this can help a person to improve their credit to qualify for more affordable credit when needed. Tax filing reduces the risk of identity theft should someone else use your information to attempt to file and request an income tax refund. You will be notified that someone else has already filed a return, and you can contact the IRS to resolve that concern. Filing builds work history for Social Security Administration retirement benefits, Social Security disability insurance, and premium-free Part A Medicare. So tax filing is very, very important for people who have a disability. And now, next slide, I would like to speak about Medicaid waiver or qualified foster care programs. A person who receives SSI and or SSDI or early retirement who is paid as a caregiver through a Medicaid waiver program or qualified foster care program may need to file income taxes to receive earned income tax credit and child tax credit. The earnings must be reported to the Social Security Administration, and this may impact SSI, SSDI, or early retirement benefits. And you can access IRS updates with the link provided in this slide. And next slide. So we'll talk about more changes for 2026, and I'd like to invite Amelia Dalton to cover this information. Amelia?
Thank you so much. Next slide, please. The tax year 2025 e-file date started January the 26th, 2026. This was the first day that federal returns were being accepted. The last day of the regular filing season is April 15th, 2026. Extensions are due on October 15th, 2026. In general, to claim a refund, you must file an amended return within 3 years after the date you filed the original return, or 2 years after the date you paid the tax, whichever is later. You may want to file to claim tax credits, deductions, and to record any earned income from employment or self-employment. Remember, if you change your federal return, it may affect your state return. Next slide. Now let's look at the standard deductions for 2025. The standard deduction, let's say for married filing jointly or qualifying widow, is $31,500. That's the standard deduction. For head of household is $23,625. And then for single or married filing separately, it is actually $15,750. Next slide, please. Additional standard deductions for age 65 or blind for 2025 for single or head of household is $2,000. And then for married filing jointly or qualifying surviving spouse is $1,600. Next slide, please. Now let's look at the earned income tax credit. The earned income tax credit, also known as EITC for 2025, the maximum credit amounts for 3 or more children is $8,046. For 2 children is up to $7,152. With 1 child is up to $4,328. And no children is $649. And a special note to remember is a person with a disability may be claimed as a dependent indefinitely. The credit is based on earned income and is paid to the tax filer. Next slide, please. Now let's look at dependents and also kiddie tax. A dependent's standard deduction cannot exceed the greater of $1,350 or $450 plus earned income. The kiddie tax applies if a dependent has $2,700 or more in earned income, such as interest, dividends, and capital gains. Next. Now let's look at the state and local tax deduction, also referred to as SALT. The SALT deduction limit for 2025 is $40,000. For married filing separate, the limit is $20,000. The limit may be adjusted in future years. So remember, this is just for 2025, but moving forward, that limit could be adjusted. Next slide, please. Now let's look at moving to faster, safer tax refunds. The federal government is updating how tax refunds are delivered to better service taxpayers. The federal government is changing how tax refunds are paid. Paper tax refunds began to phase out on September the 30th, 2025, as allowed by law. This change follows an executive order signed March the 25th, 2025. Paper checks are much more likely to be lost, stolen, delayed, or altered. Changes does not affect how taxpayers file their returns, but is in the issuance of paper, of how paper check, that's what we're referring to. Next slide, please. What taxpayers can expect and how to prepare. Direct deposit gives taxpayers quicker access to their refunds. Electronic refunds are usually issued in less than 21 days. Paper checks often take much longer and can be returned as undeliverable. Taxpayers without bank accounts have options. Banks and credit unions can help, and trusted resources are available at fdic.gov/getbanked and mycreditunion.gov. Some prepaid cards and mobile apps also work if they provide routing and account numbers. Now we're going to look at the vehicle loan interest deduction. You may deduct up to $10,000 in interest on a new vehicle loan purchased after December 31st, 2024. And the thing I want to emphasize here is this is on new vehicles, not used vehicles, but new vehicles. The deduction is reduced if the modified adjusted gross income exceeds $100,000 for single or $200,000 for married filing jointly. This deduction is allowed even if you do not itemize. So that's something very important to remember. Now let's look at the retirement savings contribution credit, the saver's credit. It is claimed using Form 8880 and is available for contributions to employer retirement plans, IRAs, thrift savings plans, and ABLE accounts. The credit amount depends on the adjusted gross income. The maximum credit for single filers is $1,000, and married filing jointly is $2,000. Next slide. Now let's look at the child and dependent care credit. The credit is calculated based on your income and a percentage of expenses that you incur for the care of a qualifying person to enable you to go to work, look for work, or attend school. You may qualify for the child and dependent care credit if you paid care expenses so you or your spouse could work or to look for work. You must have lived in the United States for more than half the year, and special rules apply for military members stationed overseas. And if you need any additional information on the child and dependent care credit, you can get that from irs.gov under child and dependent care credit. Next slide, please. Now let's look at qualified overtime compensation, mostly referred to as no tax on overtime. This allows a deduction up to $12,500 for single and $25,000 for married filing jointly. Only the overtime pay above the regular rate qualifies. And I'm going to give you an example to make sure everybody understands what that means. So for example, if you have a person that makes $10 an hour, and then they're on a schedule where they make time and a half for overtime. So let's say they work on Saturday, and that would mean they would make $15 an hour. Only the half is deductible. So that means only the $5 is deductible for the hours that they work. So for example, if on that Saturday they worked 8 hours, so that would be 8 times 5, that would be $40. So an easy way to also remember is to just remind people the whole overtime is not deductible. It's only the third. So it's really, well, I'm going to say the half, but how you get that amount to know what you can deduct is if you're a time and a half person, you would divide it by 3. And if you make double time, you would divide it by 4. So this overtime compensation is effective from 2025 through 2028. And also, when it talks about being able to deduct the overtime, it's only for fair labor standards employees. So it's not for everybody. So for example, if you're a salaried worker, you cannot take off overtime. So for more information on overtime and some of the examples, those are on irs.gov. Next slide. Now let's look at some of the misconceptions to kind of talk more about the overtime. So let's talk about, for example, what actually changed. What changed is under the One Big Beautiful Bill Act, employees can now claim a federal income tax deduction on a portion of their overtime pay, which, like I said, is only the half. It's not the full overtime. The deduction applies only to the overtime premium, like I said, which is the extra half in time and a half. The deduction limit is up to $12,500, and also it's up to $12,500, and then for joint filers, it's up to $25,000. So one of the things we want everybody to remember is just not you going in taking a flat deduction because you worked overtime for $12,500. What it's not, it is did not make overtime wages fully tax-free. And if you look at some of the advertisements that's been out and some of the billboards, this can kind of be really confusing, because a lot of times that's what you hear people say is, oh, it's no tax on overtime. So that's something you want to keep in mind. Also, another important thing to keep in mind is payroll taxes, Social Security, and Medicare still apply on the earnings, including the overtime. And that's another thing you have to also remember is, even though some of this may be tax deductible on the federal return, if you have a state filing requirement, your state may add that back in. So that's something really important to remember. Another thing to remember is this is a temporary relief, not a permanent exemption. And remember, I said it was from 2025 through 2028. Next slide, please.
Amelia, thank you so much for sharing that information. So Amelia has shared many resources and direct links to the IRS website for this next tax season. So we would like to suggest too what you can do now to make sure that you're bringing all the important information when you have your taxes done. So you want to include all W-2 forms from employers. You may receive like 1099s from an employer, from banks, also from creditors. For example, if a credit was waived and you didn't have to pay that back. So this could also include unemployment compensation, dividend payments, pension payments, annuities, retirement plan distributions. And SSI income is not reportable income for tax filing purposes, but SSDI, Social Security Disability Insurance, may be taxable. So you want to bring the statement for how much you were paid for last year to your tax preparer. There is a Form 1099-K and a 1099 miscellaneous W-2 or other income statement if you worked being self-employed, like in the gig economy. Form 1099 INT if you were paid interest on savings accounts. Total of tips earned, so that you can tell your tax preparer that you want a portion of your tips waived. When you file your income taxes, you need to bring the total amount of tips that you were paid this year. And then the tax filer will help to apply for that disregard. And so then there is student loan interest too. If you paid on your student loan payments and a portion of that was for student loan interest, you want to bring a record of that to your tax filer. And Form 5866 for new vehicle purchase in 2025. So bring your paperwork for the car that you purchased in 2025 to ask if that car may meet the criteria that you could deduct interest paid for the purchase of that new vehicle. Tip information, I just wanted to share that those who receive disability benefits, if you receive tips of more than $20 per month, that needs to be reported to the Social Security Administration as countable income. So IRS rules are always different than Social Security Administration rules. So this will help you to file accurate information. Okay, next slide. ABLE tax documents. So you may have received like an IRS form 1099 QA, and this is sent to you by your ABLE program, and it lists ABLE distributions. So when funds were paid out on qualified disability expenses, it gives the total of that. IRS form 5498 QA, this is the amount of ABLE contributions made to the ABLE account this calendar year. And instructions for these forms are provided on the IRS website, and copies are mailed to ABLE account owners, and this is also reported to the IRS by the ABLE program managers. Okay, next slide. And Amelia, if you'd like to cover access to free tax preparation services.
Yes, thank you. We have what we call the Volunteer Income Tax Assistance Program and also the Tax Counseling for the Elderly Program. And these two programs allow you to be able to go to a location and have your taxes prepared for free. So all you would have to do if you're interested in locating what's nearest to you is you can go to irs.gov and use the VITA locator. You see the link is here, or the AARP locator. You could use either one, and you would type in your zip code, and then it would give you the closest location to where you're located, where you can get free tax preparation. I would like to say most sites are different. Some sites are appointment only. Some sites are face-to-face. Some are drop-off. So that's something you will see when you go to the locator. Also on the locator, it talks about the different languages that are available at each location. So this kind of gives you, gives people opportunity to have their taxes done somewhere and for free.
Thank you, Amelia. And next slide is talking about IRS free files. So this is for an individual who wants to prepare their income tax return on their own and submit it electronically. This provides tax software that guides you through the process of completing your own income tax return. And you may need, however, to also file state taxes in addition. So then there's tax preparation services available specifically for veterans and members of the armed forces. And these people have been trained specifically to make sure that you get all the tax qualified benefits that you may be entitled to when you bring your information to that tax filing site. And the IRS makes tax filing easier to understand for military members and veterans with unique tax needs. There are certain tax breaks available to military members and their dependents as well. Next slide. So for tax refunds, you can check on the status once your income tax has been electronically submitted. You can check on the status of your refund, and the link is provided here on the slide. Visit tax refund information for income tax refund deposits into more than one account. Check with your ABLE plan to determine if your tax refund can be directly deposited into your ABLE account. So we know that some plans do not have the capability right now to accept an electronic deposit of a tax refund. So in that case, The refund can be deposited into your regular checking savings account and then rolled over, deposited into an ABLE account. Okay, and then tax refunds. So needs-based benefit programs. So this is important. Federal and state income tax refunds do not count as income. So it's okay for everyone who has a disability benefit or receives SNAP or HUD benefits or HEAP benefits to file income tax returns, because it will not, the refund will not impact your benefit. Federal tax refunds do not count as a resource for a period of up to 12 months after the month of receipt of that income tax refund. For SSI, security income, or for federally funded benefit programs, it's the same case. Federal income tax refund is not a countable resource for up to 12 months. But on the other hand, a state tax refund is not countable income the month received, but if saved into the next month, the funds are a countable resource. And this is why we're suggesting that a person who relies on means-tested benefit either needs to spend down their state income tax refund or deposit them into a qualified first-time home buyer program account, an SSA-approved PASS plan, or deposit the funds into an ABLE account. These are all examples of protected savings opportunities for individuals who have means-tested benefits. And you can contact your ABLE plan to confirm that an income tax refund may be directly deposited into your ABLE account, or if that is not available yet this tax filing season. Okay, next slide, and I'll pass it on to you, Amelia.
Thank you. Next slide, please. Now let's look at the earned income tax credit for 2026. So now we're looking kind of like into the future. So the maximum credit will increase for 3 or more children to $8,231. With 2 children is $7,316. With 1 child is $4,427. And with no children is $664. So remember when I gave you the numbers before for this year, for 2025, so you can see where the earned income tax credit is increasing for each one of these over the year. So let's say for 3 or more children is 8,231, and then for 2025 is 8,046. So that gives you that a little boost in income. So that's something really to remember. Next slide, please. Now let's talk about accounts, which the Trump accounts comes under working families tax cuts. And it's where parents or guardians can open Trump accounts for eligible children. The accounts will begin being funded in July 4th, 2026. And it's where the federal government will make a one-time $1,000 contribution per eligible child. The individual and employer may contribute up to $5,000 per year. So one of the things I want to stress for this is, remember, the $1,000 is mainly for the children that is born within the year. But as long as you're under the age of 17, anyone can have a Trump account. And the easiest way or one of the ways to get a Trump account is when you file your income tax and you complete the form 4547. Next slide. Now let's look at Trump accounts withdrawal and use. Funds can be rolled into an ABLE account at the age of 17, and rollovers do not count toward the ABLE annual contribution limit. So that is something that's really important that you want to keep in mind. So this is kind of like something to start to emphasizing or recommending that people start encouraging people to start savings accounts. Next slide, please.
Thank you, Amelia. And this year, there are also credits for employer contributions made to an ABLE account. So small businesses with 50 or fewer employees can claim a tax credit of up to $1,000 per employee for employer contributions, excluding certain deferrals or defined benefit plan contributions. This credit phases down over 4 years and is further reduced for businesses that have 51 to 100 employees. And we just wanted to make sure that people understand, employer contributions to an ABLE account are not counted as income. And those contributions need to be made directly into the ABLE account. And this is new guidance from Social Security Administration. An employee's earnings deposited into an ABLE account is still counted as earned income for the ABLE account owner, even if the employee sets up direct deposit into that ABLE account. So to learn more about other work supports, if a person receives SSI and or SSDI that can help to reduce countable income, please contact a free benefits counselor to enhance your understanding of working and to learn what work supports can help you earn and save more. So I'd just like to go over this one more time because this is new information. So I work, let's say I have an ABLE account. If I have completed my spending plan and I'm having a portion of my employment earnings going into my checking account where I'm going to pay for my monthly expenses, but I know every month from my employment, I have an extra $100 left over. I can have that directly deposited into my ABLE account. And because that is my earnings from working, that is still countable income for me, even though I've deposited it directly into my ABLE account. Now, I could ask my employer, would you please, instead of contributing to a retirement account on my behalf, could you please deposit $20, $25, maybe $50 into my ABLE account each pay period? That is not countable income for me because the employer is contributing that money directly into my ABLE account as a contribution. Okay, next slide. ABLE and SSI, SSDI overpayment. So we know many people report their employment earnings regularly to Social Security Administration, but they still may receive a notice after a period of time for overpayment. So the Social Security Administration has advised that the ABLE account can be used to repay an overpayment due to Social Security Administration. That is a qualified disability expense. But first, you want to ask Social Security Administration, if you think that you shouldn't have been charged an overpayment, you can complete a waiver or a repayment or set up a repayment plan with Social Security Administration to pay them directly rather than using, for example, your ABLE funds. So here's a tip and best practice. Confirm the overpayment with Social Security Administration. Make sure you truly owe that. You may negotiate repayment, often as low as $10 or 10% of your benefit. Using ABLE funds for repayment should be a last resort, preserving your savings and preserving your ABLE savings and investment growth. Repayment of Social Security disability insurance overpayments may lower your taxable income for this next calendar year. If repayments exceed benefits received, consult IRS Publication 915 or a tax professional for possible deductions and or credits. And then, so next slide is what steps can you take to increase your ABLE savings? Use these account tips and strategies. Set a goal to maximize ABLE contributions for 2026. Consider working to your fullest ability and use the Social Security Administration work supports. Compare tax implications of saving in a retirement account versus saving in your ABLE account. Use free tax preparation services. Compare ABLE fees and tax credits deductions using the ABLE NRC comparison tools. Use income tax credits and deductions as much as possible. Set up a bank or ABLE account to prepare for electronic tax refunds to be automatically deposited into that account. And maximize your savings with a Trump account if you are eligible. So next slide, use of tax credits, deductions, savings strategy. So file income taxes if you have employment income. That could qualify you for earned income tax credit. It could possibly qualify you for the saver's credit if you deposit a portion of your employment earnings into your ABLE account. If you have a child and or dependent care expenses, apply for the child and dependent care credits. There may be opportunity for you to file for elderly and disabled tax credits too. So bring, for example, your SSI and or SSDI award letter to your tax preparation site and share that with them, and they will see if you are eligible for those special credits. And let me cover a little bit more information about the earned income tax credit. So a person who has a disability may be claimed as a dependent indefinitely, and the credit is credited or paid to the income tax filer when they submit their income tax return. Child and dependent care credits, that credit is calculated based upon income and a percentage of expenses that you incur for the care of qualifying persons to enable you to work, look for work, or attend school. The saver's credit. So a person may be eligible if they deposit a portion of their employment earnings into that ABLE account, and they save that within their ABLE account. And this could qualify for them up to $1,000 deduction for taxes due. The maximum contribution amount that may qualify for the credit is $2,000 or $4,000 if married filing jointly, making the maximum credit $1,000 for an individual. And many states offer tax credits or deductions for ABLE contributions. So that information is available in the ABLE NRC ABLE plan comparison tools, and you can also reach out to your ABLE plan to see if your contributions may be eligible for a tax credit. And research your state-specific policies to maximize your benefits, and this information is listed within the ABLE plan comparison tools, like I said. And maybe someone could put the link to the ABLE plan comparison tools in the chat box. Okay, next slide. Tips for efficient tax preparation. Ongoing throughout the calendar year, keep ABLE receipts and for qualified distribution expenses, and track earned tips for the calendar year. Keep the file for at least 6 tax seasons. Before filing income taxes, organize your paperwork and establish a specific place for all incoming tax documents. So I try to make this easy for myself. I just have a paper envelope, and as documents come in, or as I have like my property taxes or my school property taxes documents, I put that right into that envelope. So all year long, I'm keeping my documents in one place. Organize ABLE account documents. So your Form 5498 QA, your contribution information, and your Form 1099 QA distributions made from the ABLE account this last calendar year, or for 2026, you'll have that ready then at the end of the calendar year. If you need to file income taxes, share your ABLE forms with your tax preparer. A person does not need to file income taxes simply because they have an ABLE account, but consult with your tax advisor for any complex situations specific for your situation. So we would like to share resources as well. Next slide. And next slide. So we have here IRS specific key resources. So there's the VITA locator tool, the TCE AARP tax locator tool as well. And you can also call 211 to find local free tax preparation services available in your community. And you may not need to go into that office. They may be able to help you online. And you can track where's my refund with this tool listed here. The IRS To Go, official smartphone app of the IRS, and you can explore the resources there. Tax withholding estimator. So I use this, for example, when I inform my employer how much money to take from my pay for state and or federal tax contributions to be withheld from my pay. And also, this is helpful if a person receives, for example, SSDI and or retirement benefits to calculate the correct amount of withholding. So you want like close to a $500 income tax refund, and with reducing withholdings, that could give you a lot more take-home SSDI and or take-home pay from your employer by changing your withholdings accordingly. So payments, it's never been easier to make a tax payment. More information for people who have a disability, including Schedule R, credit for the elderly or the disabled. And then there's also the IRS publication 907 that lists tax highlights for people who have a disability. And next slide. So we have resources that are helpful throughout the calendar year. We have ABLE Facts, ABLE Decision Guides, Home Ownership Inheritance Guides, ABLE Programs by State, ABLE Informational Flyers available that you can inform others that they may be eligible for an ABLE account. You are welcome to use Meet Our ABLE Ambassadors, and you'll see stories from ABLE ambassadors who either own an ABLE account themselves or their children own an ABLE account, and to see how they are maximizing their ABLE account to meet their financial goals. Able to Save podcasts and achievable newsletters. Within the next 2 weeks, we'll be posting tax facts for people who have a disability along with this webinar recording. And next slide is we have toolkits available. So we'll be updating our employer toolkit We have a home ownership guide, a home inheritance guide, a service provider toolkit, a youth transition toolkit, which has really great information for youth who, of any age, like up to age 28, 30 even, that information may be relevant for a person. And then ABLE NRC Media Toolkit and an ABLE Veterans Toolkit. And final slide. So we have resources available at National Disability Institute, our parent organization. We have information about an employment network called the American Dream Employment Network. That's for individuals who receive SSI and or SSDI who are interested in learning about their work supports and working to their fullest ability. We have the NDI Financial Resilience Center, and information there is being updated. And we have a website at NDI about accessible transportation and assistive technology. And we welcome anyone who is in need of a wheelchair accessible vehicle to share their story on how they purchased an affordable wheelchair accessible vehicle. And we will be able to compensate the first 10 submitters for their stories that are shared. And we thank you for participating in that. And we also have an NDI Small Business Hub where people who are interested in exploring self-employment or employers who are interested in hiring people who have a disability can find helpful resources there. And if you have further questions of the IRS, you're welcome to reach out to Amelia Dalton, and her contact information is posted here. And we thank you, and we thank our funder, Prudential, for helping us with this presentation today. And Marlene, I don't know if there are questions that came in, and if you would like us to address a couple recurring questions.
Yes, that would be great. Thanks, Laurie. There were questions that came in primarily, well, they were in a lot of different areas, but primarily in getting assistance in filing a tax return, in free help, and with regards to ABLE accounts. So the first one concerning assistance in filing returns, there were a couple questions. They wanted to know if President Trump stopped the e-file program, whether tax filing locations assist with both tax preparation and deductions or only basic preparation. And they wanted to know if the AARP TCE sites, if they help people with disabilities.
So Amelia, would you like to handle those? Okay.
Yes.
Thank you.
First of all, you said so much, but here I address each one of those. The question about e-file, I think what they're referring to is direct file. Remember last year, the last 2 years, IRS had their own program, which was called direct file, which has gone away. We don't have that anymore. But e-file is up and running. So e-file is actually where you transmit the returns and they come into us electronically. So e-file is up and running. The other question you said about the Trump accounts, I'm sorry, I don't remember the rest of it.
But I'm sorry, Amelia. They wanted to know if the free filing tax locations assist with both tax preparation and deductions, or only if it's basic tax filing preparation without applying deductions.
Yes, they do. Each VITA location and also TCE location, they do federal returns, state returns, and they also do deductions. What you have to remember is at the sites, they can only do the type of returns that they have trained on. So for example, if you have some type of unique situation, For example, let's say you have your own business and then you're also selling rental property, they'll refer you to a preparer. But if it's a basic return that can be done, yes, they can do that for free at the VITA TCE locations.
Okay. And the other questions were just about filing. There seemed to be some confusion when someone should be filing a tax return. There were questions, well, if I earned less than the standard deduction, they were quoting $15,750. Do they have to file? Or if they earned less than, say, a small amount of money, $500, $700, or if they got Amazon gift cards, do they have to file?
Basically, I'm going to refer you to for that. It depends on each person's unique situation. So basically, I can't think of the number right off the top of my head. Is that they may not have what we call a filing requirement. So if they make under a certain amount of income, but let's say in some instances, let's say you could make a low amount of income, but if you had withholding taken out, you always have to file to get the withholding back. So my thing is, I don't think really I can make a blanketed statement. It depends on the type of income, for example, that the person is earning, or if they're just, let's say, for example, getting Social Security, they may not have a filing requirement. But if they're just getting Social Security and they're having taxes taken out of that Social Security, they would need to file to get that withholding back. And then normally what we do at the sites, if we see you don't have a filing requirement, we educate you on how to stop the withholding from coming out of your Social Security, or let's say your W-2 or whatever, if you fall within that category.
Okay, great. Thank you for the clarification. Also, there were questions about ABLE accounts, and with the ABLE accounts, they wanted to know if they're not working and their ABLE account just earns interest, do they have to file? And they ask about the tax forms, who is responsible for issuing the 1099 or the other form, the 5498, I think it is, and when will they be available? If you could answer that one.
Sure. So a person who is an ABLE account owner who is not working may not need to file income taxes simply because they have an ABLE account. But if they receive SSDI, a portion of that SSDI may be taxable. And so it may be best for people to reach out to the free tax preparation site and ask. And so 1099s were sent out by employers, and they may be posted electronically on banking or retirement account websites where a person needs to download and print those documents out. But those were all made available by the end of January. So you should be able to get that. The 5498 form, that's not coming to my mind what that form is for.
Okay. I think with both ABLE forms, if I'm not mistaken, they're issued by the state ABLE programs.
Yes. So each ABLE plan will send either an electronic statement of the distributions and contributions made for that calendar year that the ABLE account owner can access online, or they will mail it. And that is also transmitted to the IRS by the ABLE plan.
Thank you, Laurie. And I think that's all I have.
Great. We thank everyone for participating today. Amelia, thank you so much for your expertise on today's webinar. We really appreciate your help. Thank you. Have a great day, everyone.
Thank you.